What I witnessed at the Gigafactory completely astounded me. Though I must admit that what I witnessed completely astounded me in terms of what a robot is capable of, there were no guys wandering around with machine guns and cowboy hats. Yes, and another thing I admire about this robot is that warfighters will encounter many perilous circumstances. Better for me to see that. By the way, that's what Leonardo da Vinci desired. I'm not sure if you know this. In order to save deaths during the European conflicts, he intended to create an armored robot. With this device, the robot is able to perceive his surroundings. He has far superior hearing and vision than a human, and in combat circumstances where some people would freeze, he probably has the ability to think faster. Humanoid bot creation has surged recently, which is comparable to the growth of electric cars. While Tesla is a notable success in the electric vehicle market, could a similar tale play out in robotics? Some contend that Tesla's strategy, which is based on cost effectiveness and technological superiority, establishes a challenging standard. Could Tesla's bots succeed where the Model Y failed because to its low-cost manufacturing approach? There are three types of investors. Those who invest early and take advantage of the excitement before the hype, traders who ride the hype wave, and the rest of us who end up holding the bag. Are we about to experience history again? Please click the like and subscribe buttons before we respond to these queries. Let's get this video started, and welcome to Tesla Stock News. The harsh truth is that since their IPOs, every EV startup, aside from Tesla, has suffered huge losses. Here, loss is determined by subtracting index performance from performance since listing, which paints a bleak image. It appears that another bubble is about to burst, as demonstrated by the $2.6 billion value of very young companies such as Figure AI. Like its predecessors, Type 1 investors are the driving force behind this bubble. Looking closely at the table, what we find is disturbing. With an astounding 13,743% return since its IPO, Tesla stands out. Unlike many others who were severely in the red, investing in Tesla during the first public offering, IPO, would have produced significant gains. With the exception of Tesla, which has gained 13,743% since its IPO, everything is red. Subtracting that performance from the S&P 500 since Tesla's IPO. I think that's what he's referring to here. You get a return of 13,364% for Tesla. Thus, it wouldn't have required much capital to invest in Tesla during their initial public offering, IPO, and receive a whopping return by now. Consider Workhorse, which has lost 96% of its value, or Rivian, which has lost 88% since its IPO. Losses are made worse even when taking into account the S&P 500's performance, with some companies experiencing falls of over 100%. In order to contextualize Tesla's performance, it is critical to understand the size of the profits that early investors received. The wise individuals who made an early investment in Tesla saw their capital soar, producing exponential profits that beyond all forecasts. These enormous profits are a result of Tesla's inventive technologies, visionary leadership, and unwavering pursuit of perfection. On the other hand, the state of other EV startups presents a dismal image of the difficulties they encounter. Consider Workhorse, which has dropped a startling 96% since its IPO, or Rivian, which has down 88%. These numbers show the intense competitiveness and dynamic nature of the market in addition to the inherent dangers of investing in developing industries. The losses that numerous electric vehicle startups have suffered are still very apparent, even after accounting for the performance of the larger market as reflected by the S&P 500. A sobering reminder of the volatility and uncertainty inherent in the world of investing, some companies experience a 100% decline. Beyond the numbers, these results raise important concerns about the viability of the EV market and the elements that influence its success or failure. What distinguishes Tesla from its rivals? Is it just a question of better technology, inspiring leadership, or calculated foresight? Or are there other, more fundamental elements at work? A more illuminating analogy is provided by the early years of the motor industry. In contrast to the established players in the EV field, the humanoid bot arena is still in its infancy. The EV bubble is a useful cautionary story, but it's important to understand the particular dynamics of the humanoid bot industry. Let's now go back and concentrate on the useful table that was displayed. It offers a crystal clear picture of the effects of the EV bubble. All EV startups, aside from Tesla, have suffered sizable losses since their initial public offerings. A worrying pattern emerges when losses are calculated by deducting listing performance. The source offers an interesting explanation of the different categories of investors. Three categories of investors propelled the EV bubble. First, pre-IPO, or early investors. Because of their early participation and hence lower entry valuation, this group made a significant amount of money provided enough buzz was created in the lead up to the IPO. Frequently, selling down a little portion of their total stake at the IPO produced an adequate return to make the entire investment profitable. The second category of investor includes traders, hedge funds, and others without a pre-IPO stock allocation. This group creates a trading strategy with no long-term holding in mind, taking note of the excitement surrounding the impending listing. Next is Type 3, which comprises the majority of us who are investors at IPO or after IPO with a holding purpose. With the exception of Tesla, this group of investors ended up as the bank holder in every EV company listing since they were duped into entering at a greater value and believed the hype. Retail investors are left to suffer the brunt of losses in such instances, while early investors and hedge funds have profited from the hype. Nonetheless, the source breakdown of investor categories illuminates the market dynamics in operation. Hedge funds and early investors who are skilled at riding market hype frequently make significant profits at the start of a bubble. When the bubble eventually bursts, retail investors suffer the most since they are lured in by the promise of rapid returns. Market bubbles throughout history, from the dot-com boom of the late 1990s to the housing bubble of the mid-2000s, have all followed this pattern of speculative spending driven by a mix of hype and greed. Historically, investors have succumbed to the allure of seemingly effortless funds, only to face crippling losses once confronting actuality. Let us now examine the comparison made between EV startups and the emerging space of humanoid bot entrepreneurs. Though it makes sense to compare them, it's important to understand the differences. The humanoid bot industry is relatively new and devoid of incumbent players, in contrast to the well-established players in the EV environment. Robots that resemble humans are a new kind of technology that has never been seen before. Humanoid robots operate in a different market than electric automobiles, which join one already dominated by large competitors. Human work is their rival, not other machines. Comparing it to the displacement of horses by automobiles, it may be said that mammals performed duties until mechanization led to increased efficiency. Let's now explore some thoughts from Herbert, one of the co-founders of Human Bots, a business leading the way in humanoid bot integration, and CNBC. They draw attention to a key distinction: profit margins, which set EVs apart from bots. Bots present an alternative story, whereas EVs, even for Tesla, struggle with low margins that demand large investments in intricate manufacturing and supply systems. Because of current advances in battery technology and STK, the production of bots is expected to require less money in the near future. In contrast, the development of humanoid robots tells a different story because advances in battery technology have already been made possible by investments in consumer electronics and electric automobiles. Humanoid robots can take advantage of current infrastructure. This implies that since they may take advantage of the foundation laid by the EV industry, the capital requirements for creating bots may be relatively reduced. Furthermore, the market opportunity for bots is enormous, significantly larger than that of cars, and there is no competition from the current bot market, meaning there is significant profit potential. Furthermore, the capacity of bots to work extended shifts makes a strong case for their adoption, particularly in sectors of the economy that depend on labor-intensive jobs. Whereas when EVs first came out, they had to compete with well-established products. But now, humanoid bots are opening up new possibilities and creating profitable niches. Human bots can provide priceless advice that is customized to your needs if you're thinking about using humanoid bots into your operations. Herbert thus provides an important perspective on the possible financial viability of humanoid robots. In contrast to well established sectors, the novelty of humanoid bots enables premium pricing at first. Making use of current battery technology increases profitability even more because these bots may run on the same batteries that power electric cars, computers, and cell phones. This stands in stark contrast to the electric car sector, where profit margins are extremely narrow due to established technology and fierce competition. Although there is no denying that electric cars have revolutionized the transportation industry, their usefulness is mostly limited to meeting mobility needs. But the advent of humanoid bots overcomes these restrictions and has a wide range of uses outside of transportation. The natural versatility and adaptability of humanoid bots is one of their most amazing features. In contrast to electric vehicles, EVs, which are intended to carry people or products from one location to another, humanoid robots may carry out a wide range of tasks, from helping around the house to doing manual labor in factories. With humanoid bots, the possibilities are practically endless. Herbert's futuristic picture of a world full of many kinds of bots emphasizes how revolutionary this technology can be. The options are infinite, ranging from animal-like bots that can navigate difficult terrain to humanoid forms that are tailored for human contact. Imagine a future in which humanoid robots support disaster relief operations, accompany elderly people, or even fly into space with astronauts. The capacity to modify and implement bots for particular use cases creates new opportunities for creativity and cross-industry problem solving. The perspectives of Herbert Ang provide an engrossing look into the boundless possibilities of humanoid robots. Humanoid robots have the potential to completely transform whole industries and completely alter the way we live and work as we continue to uncover the possibilities of this groundbreaking technology. Robotics has advanced significantly with the advent of humanoid bots, which can meet a wide range of commercial needs and are highly versatile. This discussion has been insightful and thought-provoking, covering everything from analyzing the similarities between EV companies and the emerging field of humanoid bots to investigating the multifarious applications and flexibility of these amazing creations. Now, though, is your chance to speak up. What do you think will happen with humanoid robots in the future, and how will that affect global industries? Do you think they will transform our way of living and working, the way cars did in the early 20th century? Please share your thoughts in the space provided for comments below. If you thought this conversation was enlightening, remember to subscribe to Tesla Stock News and like this video to receive future updates on the newest happenings in Tesla. I appreciate you viewing, and see you later.